Hello and welcome to episode 6 now of Talking Baldocks, the podcast with me, Neil Baldock, and my brother.
Nat Baldock.
Good, I'll remember to introduce you this time.
Thank
Uh,
you.
so yeah, this time we're running through our 7 pain points of estate and letting agents, and we're at episode 6. We're actually going to talk about something today, which is financial stress and poor cash flow and what you can do about that. And really and truthfully, that probably should have come as number one or two after the your kind of North Star and setting your vision. Um, but we appreciate it's not always the most interesting subject to spark people's attention, but important nonetheless.
You love it though, don't you? You're like a kid in the sweet shop getting to talk about numbers.
Well, of course. So you know, I'm
But it
gonna
is. I
I'm
mean,
gonna step out of the shadows here.
so I think yeah. I mean, listen, we were trying to hook people in, obviously, to our exciting content. So we didn't get down to the numbers straight away. But ultimately, you can't run a business without finances. So this is something that you really take care of mainly in our side of the business. I mean, I will, bow down to it. I don't find it massively interesting, but I do know it's massively important because I like to get paid. Ultimately, I think very quickly before we get into it, we should just distinguish because there's a lot of people out there that say, "Oh, I've got cash flow." I believe the biggest problem is in pretty much any business, not just estate agents, in any business size, tends to be staffing and cash flow. They're the things that you tend to find. But what we find when we're speaking to some people is they say, "Oh, I've got cash flow problems," which what they're saying is not banking enough money. And when we look at it, they haven't got cash flow problems; they've got sales problems, right?
Definitely.
So that's the bit that we can talk about another time, is actually making sure you're not cash flowing because actually you're not selling anything. Whereas, a lot of the time people just say it's cash flow, but actually, well, nothing can flow if you're not putting it in the top. But for today, we want to talk about cash flow and that kind of thing, and why it is so important. And why do you think really a lot of estate agency owners, independent estate agency owners in particular, struggle with it?
Well, I think probably because they've never had to do it before. So if you look back to most, and I bang on about this all the time, but most estate agents' journey is that we all started out as an office junior or an egg in a corporate, and then we worked our way up through branch managers and whatever else. Um, and not many of those roles, unless you start getting to area managers, regional managers, involve budgeting and looking at cash flow. So all that's done from your head office. Um, but of course, as soon as you go out on your own as a business owner, you are now your own head office, and you have to deal with your marketing, all the functions that were dealt with at a head office level before, finance, operations, marketing, etc., all kind of fall onto you. So I think that's probably why it's just simply that unless they've come from a financial background, they don't have any of those. They've never done it before.
No, yeah, exactly. We were exactly the same. And I think even at branch manager level, you will sometimes, you win an award for most profitable office. And I often hear people online doing when I was an estate agent, I used to make this much profit, but I bet they didn't know how much they spent on toilet roll, and
Yeah,
and stuff like that. So they got given the headline number, but they didn't truly understand the breakdown of it. And I also think as estate agents, we've got a bit of an ego because our jobs generally are to go out and tell people we know everything, we're the best person for the job. So I don't think we actually like putting our hands up and saying, I don't understand how that works. Um,
that's right.
you
And also, it's not the fun bit, is it? Let's face it. We all love going out doing listings, everything else, and that can just be forgotten about, right? Until it becomes a problem.
yeah, yeah,
And then all of a sudden it takes up a lot of your time because you're like in panic mode. Oh God, we're running out of cash. Like, what's happening? I don't, and it really, and we could talk about that, but it's the clarity of understanding it and knowing where you are. Like, to be honest, if you're losing money, but you know that, you can fix it.
yeah.
It's where you don't know and you don't know what's happening is where you really struggle to put solutions in place.
Yeah, exactly. I read, funny enough, a thing online yesterday. And it was about business owners putting sticking plasters on things when they really needed to have an operation, but you don't actually know that, and unless you know the numbers right. And it's not really interesting. You've got two options, haven't you, as a business owner? If it's just you, tough, really. You've got to learn it. Or if you're a slightly bigger business and you can employ someone who does know how to do that and doesn't want to do it. I read a really interesting thing from Richard Branson. You know, he's massively years and years, generations into his career and still didn't understand the difference between net and gross profit, right? But Branson doesn't
Yeah.
have to because he surrounds himself with people that do. And that's the same, you know. So if you really don't enjoy it, and you don't like it, and but you're a business you can afford to bring like somebody in that can do it, do that. But if you need to, if it's you by yourself, then sorry, you're going to have to understand it. So, do you want to maybe run us through the basics of what people need to be understanding?
Yes, definitely. Yeah. Sorry, we've got a dog barking in the background. So we've
Is it,
got we've
is it
got
in the water?
we've got Wooly featuring. Yeah, he must be running around the hills here somewhere. So here he comes. Anyway, yes, I think we should talk about basically it's implementing financial systems into your business. So what a lot of business owners do when they first start up is, we get an accountant, and the thing is with accountants, unless you get a really good one, their job isn't to manage the finances of your business unless they work, unless they're directly employed by you. And this took us probably years to understand is that actually you employ an accountant to do your accounts, but really they're just doing your end of year accounts. And if you leave your finances for a whole year before um, you understand what's happening with them, obviously a lot of things can go wrong. And you get to the end of the year and then you realize, oh, we didn't make enough profit, but I've paid myself dividends anyway, or whatever the case may be. So I think that's the first thing. Is like everyone gets an accountant, but you've got to realize that's not enough. Like you can't just wait a whole year, turn up to their office with a box full of receipts, and ask them to do your end of year accounts, because by that time it's just far too late, and then you're gonna have a whole load of problems to unpick. So, when we speak to agents, it is still surprising in this digital world we live in now. There are still businesses out there who are running their finances out of a book, or paper-based records that then literally get delivered to the accountant. And so I think one of the first things you've got to do is get your business onto something like Zero, which is what we use. There's other ones like QuickBooks. There's multiple other ones, but those are really the main two. But you've got to digitize your accounting and your bookkeeping. And bookkeeping is different to accounting. Accounting is to do your end of year accounts and file those at Companies House. And your bookkeeping is to tell you what's happening like in a shorter time period every month. And then once you've got that on those systems, then you can run what we call monthly management accounts. So you can actually look at your profit and loss every month and see what's actually happening within the business.
Okay.
So once you've done that, it's just you've got information at your fingertips then, and that's really what you need to be able to do to make financial decisions. Um,
I think if you kind of just take it even into your personal life, right? Because if you're not tracking stuff, you don't really know how much you're spending. So, for instance, you'll go to the shop and buy yourself a coffee every day, and you just think, oh, that's only a couple of quid. That's just a coffee. And at the end of the month, you'll think, well, I haven't got as much money as I thought I had. But then you look, and actually, when you went to get that coffee, it wasn't a couple of quid; it was a fiver. You also picked up a chocolate bar and maybe a bag of crisps or something like that, or a healthy granola bar for those of you, that like ice baths at 5 in the morning. And all of a sudden, you've done a tenner a day. So all of a sudden, you've done 300 quid a month on what you thought was a 2 quid coffee, right? And that's
yeah,
the problem. If you're not actually tracking it, then you don't know. So much like in your personal life, you probably know a list of all your direct debits. So you know what your mortgage or your rent costs. You know your gas, your electric. You know your Netflix. Even granted, you know your Netflix. Your Amazon Prime. That even that £5, 5.99, whatever it is, it all adds up, right?
Oh, mate, it does. Sort of an example of that is I recently went on a bit of a financial program because, as you know, I'm really into this kind of stuff, and we did an exercise because you've got to do your personal budget first, so you then, as a business owner, you know what you need to take out of your company as well. And we've sort of through doing that looked at the last 3 months of spend. Actually, went through bank statements, looked at what was actually being spent, and I'd been spending 250 quid a month around the corner shop. Um, Now that's a lot of snacks, and I'm losing weight at the minute, so that's kind of reduced. But that was just like you pop around the shop, buy a bottle of milk, a loaf of bread, you pick up a few bits for like your kid as well, and whatever, and then all of a sudden you're spending 250 quid a month around the corner shop. Um, and that's one example, but lots of people are probably doing that and just spending money that they're not kind of like realizing. And it's the same. It's the same in the business because a lot of business owners go, "Oh, but I'm only taking X amount out of the business," and then you're like, "Yeah, but you also got your car being paid for out of it. You've also got a loan repayment going out, or whatever the case may be." And we'll come on to those things and sort of what goes on the profit and loss and what doesn't. But you've got to be tracking this stuff to know about it.
Exactly. And even, listen, we don't profess to be perfect and we've learned the hard way. I remember we did a big audit of all our company direct debits a few years ago now, and we were paying for two printers. And
Ex-
we only had one printer. So it is amazing what you can, you're busy running the business, you're signing up for this, signing up for that. And you sometimes forget. So I think maybe the first step is really to take a step back and really get a list of everything that is a monthly outgoing.
Yeah, definitely. Because we're all so busy running around trying to get new business. We're not looking what's going out the back door. And that's a perfect example. And if you find, if you've got 100 quid going out, people say, oh, it's only 100 quid. Well, you find 10 of those that are unnecessary, all of a sudden you saved yourself £1,000.
Yeah.
So saving any little amount of money, as the Tesco would say, every little helps. And we're big fans of trying to save like 10% on everything, because if you save 10% on all of your costs rather than trying to make one big saving, and all of a sudden, again, all these small things compound effect, they all add up.
That is, yeah, and I think that's an important point just to highlight is that a lot of times someone says I need to cut my overhead by 10%. They look for that, so I'm going to have to fire that person, or I'm going to have to lose that bit of software. Where actually, if you took 10% off everything, so even your 30 quid a month phone bill, take three, can you get that down by 3 quid? If you can take 10% off everything, that still adds up to the big 10%. So that's if you are sitting there, and sometimes I think it can get a bit overwhelming. You need to save some money, but you're like, what big thing can I lose? You don't necessarily lose one big thing, just shave a little bit off lots of things. You renegotiate packages, on most things, and you'll be surprised how much you can save there.
Definitely, yeah. So I think once you've got a proper bookkeeping system in place and you've got your accounts digitized, so you've got financial information kind of at your fingertips, the next thing people need to do is try and understand the difference between profit and cash, basically. And that sounds odd, but people will say, well, I've made 100 grand profit, but I've got no money in the bank. I've got a cash flow problem now. Where's it all gone? Um, and again, we've made that mistake in the past, but we've done a lot of work into sort of understanding these things and kind of knowing how the finances work now. But that's because, again, people don't necessarily understand the difference between your profit and loss, your balance sheet, and your cash flow. So essentially, there's certain things that don't come off your profit and loss because they go onto your balance sheet. And this is important when people are making acquisitions, for instance, because they may make an acquisition which all of a sudden is generating them huge amounts of profit, which they've then got to pay 20% minimum, maybe depending on their level of profit, could be 23%, whatever, corporation tax. Because they don't realize that their loan repayments don't come off your profit and loss. They actually go onto your balance sheet. And so therefore your profit figure doesn't match your cash figure, because you've got that profit, but you're taking some of that cash and paying off the loan that you've got to do the acquisition or whatever it may be. And that money is actually it comes out of your bank account, but it doesn't come off your profit and loss. You're still paying tax on it, if that makes sense. Then obviously, the owner of the business can only take their dividends from profit. So you've got to have enough profit there to have actually withdraw. You might be withdrawing more dividends than you actually made the profit. And again, you'll only kind of know that. So we structure our profit and loss in a way where we build something called super profits. And at the bottom of our profit and loss, we have the normal one, and then we'll have more lines of what's actually coming out. So dividends, loan repayments, our car repayments, leases, etc. Stuff that's not directly being paid by the company or coming off the profit and loss will then go down, and we'll then have an actual cash profit figure. And that's really what people need to get to. And that's where you then start understanding your cash flow. Was I making you a little bit tired there,
Sorry, I
Matt?
had a bad night's sleep. It wasn't that it was truly boring. I was trying to stifle it. Then. Yeah, no, it's as I say, it is sometimes when you say things like that, if you're sitting there watching this or listening to it thinking, Christ, that has all gone over my head, Neil can explain that to you. We've got a really good accountant that runs kind of courses that can explain things to you. It can seem a bit overwhelming, but it is just so important to understand. I mean, I think much like where we spoke about things in the past about knowing, your target, your KPIs. You can't build a house without having the architect's plans. It's exactly the same for this, right? Because otherwise, you're going to be running along, selling houses, letting houses, and this is great. And one day you're not going to be able to pay somebody, and you need to be able to see that coming, a distance in the future.
Yeah, definitely. And that's where then once you've got all the things we spoke about, then you put a cash flow report into place, which kind of tells you where your cash is coming and where it's going. Um, the difficult thing about our industry, so most businesses, they can do something if it's a true cash flow problem, not a sales problem like we've discussed. They can generally do something about it because they can maybe invoice finance it and things like that. Whereas our business is quite unique, I find, because we're building a pipeline. So let's say you got a 200 grand pipeline. Well, we're not invoicing that until the exchange of contracts. Most businesses would have invoiced that at the start of them doing the job, and therefore they've got 200 grand worth of asset that they can invoice finance if they want and get, they might lose 20% of the revenue, but they can get the cash now. They can kind of do things like that. Whereas the estate agency industry is fairly unique in the fact that we'll have that 200 grand or 300 grand or whatever it is pipeline sitting there, but actually some of that may not come to fruition because we have fall throughs. Some of it may just, we're not on 30-day payment terms. We're on whenever this sale goes through payment terms. So there's obviously then you've got effective sales progression that's got to be done properly to make sure your pipeline's converting regularly and things like that. So there's a hell of a lot of elements. But the thing is, once you've got a real, you sort of almost have to put the groundwork in and get these. I call this like the foundation of your business. If you've got these foundations laid, much like building a house, you start laying the bricks on the grass, no foundations, no footings, it's going to fall over at some point. If you put the foundations of your business in with these proper financial systems, understanding of that, how to monitor it, you put a bit of groundwork in at the start, but then you've got a real building block to scale your business on.
Yeah. And would you advise? So again, agents love to kind of inflate figures. So a lot of agents tell me they've got 70% listing conversion rates because they don't count the listings that into market. Whereas obviously, really to get a true idea of your business, you have to count everything. The same with your cash flow. Is the dog okay? Is the dog want to say something?
God loves it. I think he probably wants to sit on my lap and come on the podcast.
More than welcome. If you're going to put numbers into your cash flow, don't over egg. We don't have a fall through rate. Really legislate for deals fall through. So if you've got 200 grand pipeline, don't cash flow that you're going to complete on 200 grand, right? Almost, would you suggest almost kind of go worst case scenario on that?
Well, I would, I think so, because you don't want to, at the end of the day, when you're working for yourself, you don't want to be kidding yourself. So I think essentially we've got to do predictions on our cash flow reports. Let me get the dog and we'll have him on the podcast.
Yeah. Now, I've just realised that we've actually put this on just audio only because we're obviously videoing it. So I'm just having to speak to fill the time so people don't switch off.
Well, we've now got, at least we've got Wooly on the episode. So welcome to the estate agency world, Wooly.
So there's a dog on the screen.
So yes, I think there's no point in kidding yourself is the first thing, and you've got to get good at predicting in a cash flow within an estate agency business. But there's ways to manage that as well. So if you're doing a cash flow report and you're predicting it, what's really advisable is to also have another line which is your actuals. So you predicted cash flow, and then you track your actuals, because what you'll get to kind of grips with then is how good you are at predicting your cash flow, and you'll soon find out if you are kidding yourself, really. So yeah, but there's no point in sort of overinflating what you think you might receive, because at the end of the day, you want your cash flow report to be as accurate as you possibly can.
Exactly, because then that again, remember, we've been here in our early days. You don't panic then if there is going to be a bad month. So you sometimes you can have it, and because especially with sales, they take so long to go through, which again is another reason we advocate people build a really healthy lettings business. But with the sales, if you think, oh Christ, in June I'm not going to bank anything, but you know that July or August you're going to have a bumper month, even if you then have to go cap in hand, see a bank manager, something. If you can see the vision and come the end of the year, we're going to start having some real bumper months, it makes you more comfortable going to somebody saying, I need to borrow some money. And it makes people more comfortable lending you the money, because you're not just saying, oh, I promise you I'll pay it back. You're actually saying, look, here's the forecast. The money's coming. We just need a little bit of help to get us through this patch.
Exactly, mate. And that's the thing. When ultimately, if you did need to go and borrow some money, all the things we're talking about is what you're going to be asked for, and then you've got to start putting it together quick, sharp, to provide what's needed. And the thing is, people sometimes are scared to borrow money, but that is sometimes part of business. Maybe not if you're a one man or woman band self-employed agent, and you're just and that's all you want to be. You're not looking to expand. You're not looking to grow a business. But the reality is, if you're looking to grow a sizable business that operates without you, and maybe has multi branches and things like that, at some point you are going to end up probably having to borrow some money. So you need these kind of things in place. So yeah, it's just the foundation of your business. It's just really important. The other thing is with the cash flow report, it helps you sleep at night, because at the end of the day, if you are going into your overdraft, let's say, and you don't know when you're going to come back out of it, that can be quite stressful when you're thinking, Jesus, what are we going to do? We've got wages at the end of the month. We've got VAT return coming out. What are we going to do? If you know what's going to happen, and also if you're thinking about employing more people, or if you then plug those figures in and see how that affects the next 3 months of your cash, it just gives you that clarity. Again, we speak about clarity all the time. It just gives you that peace of mind and clarity over actually what's happening now, but also the effects of what you're doing and what that's going to look like.
Yeah. And I suppose it goes back to, again, if you reflect into your personal life, most people probably wouldn't go through life not sure if they're going to be able to pay their mortgage or be able to pay their rent or be able to pay for the kids for this or that. But in our business life, sometimes we do just get the blinkers on and just kind of work. So I think it's just, if you do it in your personal life, you want to make sure you've got the right money coming in to pay for everything you need. It's just doing the same at work, right?
100%, 100%. The other thing, sometimes if you've got all this financial information together, you could be doing things in your business. You think, right, I need more sales, and I need more members of staff, and I need more whatever. And actually, you might not. You might, if you do more sales and take on another member of staff, you might actually make less profit than you did with just you and another, or you and two,
Yeah.
or. So it's having that information, because otherwise we spoke about that becoming a busy fool, but you might be ending up building something. Don't get me wrong, if there's like a lettings business, for instance, you're building a massive value out of that. So sometimes there's the argument that you might have some more overhead, you're getting less cash out of it, but you're building equity essentially that at some point you're going to exit and sell. So that's the trade-off. You're willing to take less cash out of it because you're going to get a bumper payday one day. With a sales business, that's quite different, because unless it's a huge operation, a real sort of commercial operation without any involvement from the owners and that sort of thing, it probably doesn't have too much value other than its pipeline. So you want to be making a profit out of it. And yeah, again, having these systems in place, which aren't complicated, we're basically talking about an accounting package and a couple of Google sheets, like spreadsheets, that you track this stuff on. And if you don't like doing it yourself, then again, you can outsource that. You can get a PA, a VA, ask your accountant to do it. I mean, really and truthfully, I don't think there should be any agents who are doing anything to do with bookkeeping, anything to do with VAT returns, anything to do with payroll, and anything to do with accounting. Those should be done by your accountant or a specialist bookkeeper, etc. And you just want the information. Like, I mean, I answer some financial queries, but I'm not sitting there coding what expenses,
No.
what, and everything like that. That would be a waste of my time, and frankly, I wouldn't do that very well. That's a bookkeeper's job, so they do that for us. And then my job is really just to look at the numbers and say, right, okay, now I've got a picture of what's happening. Guys, this is what we need to, this is the situation we're in. This is what I think we need to do. What do you think? Let's go.
Yeah. No, exactly. We're not trying to teach people to be accountants at the end of the day. Again, you as agents, we want to do the fun stuff, right? We want to do the fun stuff, but you don't want to do the fun stuff and then all of a sudden not be able to do it anymore. So this is why we just say, you get your numbers. Just even going back to like the sales and employing people, a very easy and naive way to think about it is I'm going to employ someone on 30 grand a year because they're going to bring me in 60 grand or 90 grand. So 30 grand a year is going to cost me 2.5 grand a month. But it's not, because obviously you're going to have to pay your pensions, PAYE. Are they going to need a car? Are they little things? Do they need a laptop? Do they need a subscription to your prospecting tool? So that all of a sudden 2.5 grand actually turns into like 5 grand or something. So it's just really important to know the true cost of anything you're putting into your business.
Yeah, 100%. That's a classic mistake people make, because we all just think, oh, that only costs that. But it doesn't. I mean, you've got to go in to the office, so there's rent. You've got to turn the lights on. There's some utilities. You've got to buy that person a laptop or a computer. So there's a cost. There's so many. You've got to pay the member of the team their mileage to go and do your viewings for you. So all, like you say, unless you've got this information in, you can't make any decisions at all. And really, if you don't have the information, it's like the blind leading the blind, and that's not a good way to run a business.
No, most definitely. As we say with everything, I'll go back to it. It's clarity. We always say the big word is in business is consistency, but clarity is certainly up there with it. Is there anything else I kind of think was really important to go over on this topic today?
I mean, I could go on for hours,
Yeah.
but I think the important thing as a recap, if people are sitting there thinking, I've got profit on my accounts, I'm having to pay my corporation tax, but I've got no cash around me, and I've got, I can't pay myself, or I can't whatever, then they need to take some action, and they need to understand the difference between profit and cash, and really get an understanding of what goes on in your profit and loss and what goes on the balance sheet. And as you say, more than happy to spend some time with people and kind of answer a few of those queries. The caveat to that is I am not an accountant. I'm sort of more of a finance director at our company, I guess, but I'm certainly not an accountant. So if you want accountancy advice, you need to speak to your accountant. But again, what you sort of find, if you've got an accountant that doesn't tell you anything or doesn't give you any more information than at the end of year end you have to pay the HMRC X amount, then you need to be either changing accountant or having a word with them and saying, look, I need a bit more out of you.
Yeah. No, most definitely. Good stuff. All right. Well, listen, you said you'd be happy to have a chat. You'd be delighted to have a chat. If anybody wants to speak to Neil about the financial side of running a business, you will make his day. So definitely do that. We always forget to do the like and subscribe bit. So if you wherever you are listening or watching this, if there is a subscribe button, please do. If there is a share button, please do. We're trying to help as many people as we can here. If we speak about anything you want to know any more depth in, please do get in touch. But no, thank you, Neil. I think you need to go and take that dog for a walk.
Yeah, he never barks, and then he just wanted to make an appearance. So bless him.
Good to see it. But no, thank you, Neil, and until next time.
See you later.